Let's take a case study based on accounting equation. So we have 10 transactions. What we'll do is we'll solve 5 in this session and 5 in the next session. You have to analyze the effect of each transaction on assets and liabilities and show that the both sides of accounting equation, that is asset is equal to liabilities plus capital, remains equal. Okay. We'll discuss item by item. So 5 items we'll solve in this session. Transaction 1, introduced $800,000 as cash and $50,000 by stock. So this transaction will affect cash because cash is coming in. It will affect inventory, that is also coming in. So both are on the asset side, and on the capital side you will have combination of these two because both are coming in the form of capital. So on the asset side cash and inventory are affected, and on the other side capital alone is affected, liabilities are not affected. There is increase in cash by $800,000 and inventory of goods by $50,000 on asset side. Capital is increased by $850,000. So if we frame the equation, if we say that asset is equal to liabilities plus capital, assets, we have two assets. One is cash plus inventory, 800,000 plus 50,000. This is equal to capital of $850,000. Okay, this is transaction 1, and here you can see the asset is equal to liabilities plus capital. So we have to carry this balance for the second transaction. Transaction 2, purchased plant for $300,000 by paying $15,000 in cash and balance at later date. This transaction will affect plant, okay, because plant and machinery and asset is coming in. This will also affect cash because $15,000 cash is going out. So on the asset side the impact is on positive impact for plant and negative impact for cash, and on the other side there is no impact on capital but there is impact on liabilities because out of $300,000 only $15,000 is paid in cash and balance have to be paid at a later date. So it is a liability. We have to recognize that liability. So look at here, this transaction affects cash and plant and machinery on the asset side and liabilities on the other side of the equation. So there is an increase in plant and machinery by $300,000 and decrease in cash by $15,000. So we have to recognize the liability to pay to the supplier also, that is $300,000 minus $15,000, that is $285,000 liability should be recognized. Okay, let's write the equation, but before that we'll bring the previous equation. Okay, so this is the previous equation which we have already written. So from this cash we have to deduct $15,000 and we have to add $300,000 under plant and machinery. Okay, we'll do that. So from cash we have deducted 15, under plant we have added 300,000, and on the right hand side there is impact only on the liabilities, which is $285,000. So what happens to cash? 800,000 minus 15,000, it is $785,000. Inventory remains same. Plant and machinery we are recording now, and on the right hand side you have liabilities of $285,000 plus capital of $850,000. And if you total this asset side total, you get say 1135,000, and on the right side also you get 1135,000. So your equation is maintained. Next, transaction 3, deposited $600,000 into the bank. This transaction will reduce the cash and it will increase the bank. So all the effect is on the asset side only. Okay, so what is undergoing change is the composition of asset. Total asset will not undergo change. Cash will decrease and bank balance will increase. So let's bring the previous equation. This is the equation which we have just solved. Okay, so from 785,000 we have to reduce 600,000 and we should add that in bank. Okay, so minus 600,000 plus 600,000, minus from cash plus with bank, and these are all the remaining numbers, and if you total again your accounting equation is maintained. Okay, moving on to transaction 4, purchased office furniture for $100,000 and payment made by check. Again this is a transaction which is going to have effect only on the asset side. Furniture balance will increase and bank balance will decrease. Okay, so again this is affecting asset side only. only the composition of asset is undergoing a change. Let's write the previous equation. This is the previous equation. Now we have to reduce the bank balance and increase the furniture, right? So from bank, let's reduce $100,000, and for furniture we'll add that. Okay, yes. And if you do the totaling, 600,000 minus 100,000, you have $500,000, and furniture, new one, $100,000. If you total both sides, it's going to be same, so your accounting equation is maintained. Next, transaction 5. Purchased goods worth $80,000 for cash and $35,000 in credit. So this transaction will affect cash balance. This will affect your inventory, that is stock, and it will also have an impact on what? Liability, because $35,000 in credit. So 80,000 minus 35,000, the balance. No, not like that. $80,000 for cash and $35,000 in credit. So put together, you have to adjust inventory, because inventory purchased or goods purchased is 80,000 plus 35,000. It is 115,000, of which 80,000 is paid in cash, so it will have impact on cash account. 35,000 will have impact on liabilities, and 115,000 will be the impact on inventory. Okay, so that's what you see. It affects cash and inventory on the asset side, liability on the other side. So cash will decrease by $80,000, inventory will increase by $115,000, aggregate of these two. Liabilities will increase by $35,000. Okay, so look at the equation. This is the previous equation. Yes. Now what we have to do, we have to reduce the cash by 80,000. We have to increase the inventory by 115,000. Okay, and on the liability side, we have to increase the liability by 35,000. Now let's do the totaling. Cash 185 minus 80 is 105. Inventory 50 plus 115 is 165. Plant and machinery 300,000. Bank and furniture same. Whereas on the liability side, already you had a $285,000 plus $35,000. So $320,000 is a liability plus capital. So now we get the total 1170,000. Okay, so 5 transactions we have covered. There are another 5 transactions which we will take up in next session.